Welcome to the Invest Smarter podcast. Today we have an awesome show and we're really getting back to talking about investing in the markets. Today I have on Herb W. Morgan, the president and founder of Efficient Market Advisors. Now this guy is sharp and he is great at simplifying complex financial concepts. So if you want a great, short, and concise breakdown of the market each week, I highly recommend you listen to his podcast, Slaying Bulls and Bears, on any of your favorite podcast listening services. I listened to a few of them. They're about 15 minutes long, and they really are good. If you really want to know what's going on, what's going to move the market this week, what to look out for, it's a great show. But today, we get into breaking down inflation, trying to understand if it is here to stay or not. We talk about the great experiment that is modern monetary theory and how it could end up with unintended consequences for our country. We talk about the US dollar's role as the reserve currency for the world. We sneak in some talk about Bitcoin and cryptos, and we also get into Herb's expectations for potential tax changes. So let's get right into this. Here's my conversation with Herb Morgan.
Welcome to the Invest Smarter podcast, where we'll simplify investing and provide actionable ideas to help you navigate the markets and own your future. From retirement planning strategies in plain English to timeless investing wisdom, we'll cut through the noise and leave you a smarter investor by the end of every show. All content within the podcast is for informational purposes only and should not be relied upon for investment decision making.
Welcome to the show, Herb Morgan from Efficient Market Advisors. It's really great to have you on to the Invest Smarter podcast. I listened to a few of your weekly market updates and read some of your stuff, and it's great. You really are on top of the data and what's going on. So I'm excited to pick at your brain here.
Well, I try to be. It's an honor to be on your podcast, and I believe you're out in Pennsylvania. So I don't know how many Padre fans there are out there, but this is our opening day out here. We're very excited.
I'm very excited for you. I'm not a big baseball fan, but hey, I was when the Phillies won the World Series for that 1 year.
Hey, I would be too. It's not something we can ever say in San Diego. We're the only major city in the country without a national championship of any kind.
Yeah, that's not a great thing to be known for.
No, but we got great weather.
Yeah, you do have great weather. I've been there one time, and I don't know why my computer keeps going off, but yeah, it was beautiful. Every day was the same. I was there for the Schwab Impact conference when they had it there, and it was just amazing.
Yeah,
it actually seemed kind of fake the way that everything seemed. So it was actually very clean, where at least where we were, everything seemed all manicured, and I felt like I was in like some sort of utopia.
Yeah, well, we call it America's finest city. And starting about 2 hours ago, the U.S. Open, the first players teed off just over my shoulder there. You see just past those trees, the Torrey Pines golf course. So we're excited for that this weekend.
It's right behind you.
Well, it is behind me and then maybe another half a mile.
Oh, well, that's amazing. That's really cool.
Yeah.
Are you a big golf fan?
Big golf fan. Like to play the game myself as much as I possibly can. But I'm getting a little older where if I play every day, I get too many hurts and pains. So I have to back off and do a little work sometimes too.
Yeah, I'm borderline obsessed with golf. I'm not very good yet, but I actually built a little simulator in my garage. So I go in there, sneak in there a lot.
Oh, I like it. I like it a lot. Good for you.
Yeah. All right. So let's get into some investing market stuff. I personally feel like it wasn't very long ago that talking heads were saying that we'd already be over 2% 10-year yield by now. It was going to fly and things were going to go crazy, and the Fed was going to be wrong about it being transitory. But yet inflation is really heating up, or it heated up to its potential max. I don't know. But now 10-year yields are going down. So what is going on with that?
Yeah, I was one of those talking heads. I had predicted 2.25 10-year by the end of this year. I guess I'm not wrong yet because the year isn't over, but we dipped into the 145, 148 earlier this week and late last week. The reality is there's so much liquidity and there's not enough velocity of money, meaning not enough money is getting lent and spent. So it's being parked in many cases. And if you look at a graph of M1 velocity, M2 or M3 velocity, a great economist, Milton Friedman, said, inflation is always and everywhere a monetary phenomenon. So you would think you print all this money, which we've massively raised the money supply. The rest of the quote goes on to say is something to the effect that in so much as it, meaning when it goes through the economy, when the velocity goes up, you get the inflation. What we really had was bottlenecks in the supply chain. We had a lot of trouble getting things reopened. We're having trouble getting people to come back to work at the lower end of the wage scale. And right now, the market is absolutely 100% bought in to the Fed narrative that the inflation move is transitory. And we see it, like I'm looking at my Bloomberg right now, all the forward months on most of the commodities are lower than the current month. So they're in backwardation, lumber, coffee, corn, you name it. It looks like the Fed may get it right. I still think there's an awful lot of risk there, but at least for the last 2 weeks, the market's going their way.
Yeah, it's quite fascinating. Today, I look at what's going on just today in the market, and today's the day after. It's Thursday, so it's the day after the Fed. The minutes came out. I wouldn't have expected sort of financials to be getting crushed. I wouldn't expect the Dow to be down. I wouldn't expect the NASDAQ to be up this much. So I think, yeah, it seems like the market, by and large, the participants are sort of warming up to this idea that could be transitory. And I heard on TV, this is an oversimplification, but the Raymond James CIO said he compared what's going on now to it being like Friday night of a brand new, blockbuster movie where everyone's trying to get to the movie at the same time, and there's a huge line. And then a week later, no one's in the theater. So how much of the inflation is this price pressure of consumers trying to do the same things at the same time? And when we get to September and kids are going back to school and things go back to normal, maybe prices depress a little bit.
Yeah, there's no question that you got that base effect, right? So a year ago, everything was shut down, prices were plummeting. Now it's opening. And then there is this mad rush to book plane tickets, to go to movies, to get hotels, to rental cars. Used cars are getting bought up with all the stimulus checks. So used car prices are through the roof. That's going to work itself through the system. The question is the Fed's job. They have this balancing act, right? So you pump all the money in to smooth out the pain, but then can you extract that liquidity without causing new pain, a recession? That's the science of being a central banker. There are some economists who would argue that's too risky. You shouldn't do that. You should just have the money supply grow at a fixed rate. Others are advocating for even more monetary and fiscal stimulus. We're not in that camp necessarily. But to your comment about the Dow being down today about 200 points and the NASDAQ being up 130 points, we're looking at about 150 basis point delta in the two. In the end, I think that's the value trade getting crowded out. So for the last 8 months or so, everybody's been talking about it's the end of growth, get into value. What is the NASDAQ? NASDAQ is growth. What is the Dow? It's some of the older industries where the value was, some energy names, et cetera. That trade got too crowded. I think it's over, and you're seeing a transition back to growth. And I think you're going to see NASDAQ leadership.
That's interesting. It's interesting. I for a period of time, I was sort of thinking that because value has been underperforming just for so long that I thought maybe it could get a more than 8 months of sunshine. You're saying maybe, at least, are you saying for short term crowding out, or you're saying back to relative underperformance relative to growth?
I think it's going back to relative underperformance to growth. And today it looks like it's a big transition day. I mean, normally, the default on everybody's monitor, including mine, you got Dow, S&P, and NASDAQ, and usually they're all up or all down, and it's similar percentages. But to see 150 basis points, I mean, you see the NASDAQ up 1% and the Dow down 0.5% is is, I think, just is showing what we've been saying, and that is that it's back to growth. And, value, when I started in the business in the 80s, you valued companies, discounted cash flow, but you also looked at the assets. And how do you really measure the assets of Netflix, Microsoft, right? These great companies. What are the assets of Salesforce, right? It's code. How do you loan against it? So it's a different world. And I think the old ways, the old Graham and Dodd ways of measuring value need to get updated so that from a macro perspective in the value index, like a Russell 1000 value, I think you have a lot of old technology that, energy is a great example, right? When I started, when I had hair, energy was like 25% of the market cap of the S&P 500. The biggest companies in America were Exxon, Chevron, some big tobacco companies, right? They've all gone in terms of their relevance to almost nothing. The total market cap of energy in the S&P 500 today is sub 3%.
Yeah.
Right?
Yeah.
And tech has gotten so big that we're pulling companies out of the tech sector and putting them in new sectors, communication services. We created that, right? Communications used to be phone companies. It's like 3 companies in the sector.
Yeah.
Well, is Google a tech company? I think it is, but we moved it to communication services. Is Facebook a tech company? Yes. It's not in the tech index anymore. So
wait, Facebook's not in like the spider tech.
Yeah, it's in communication services.
Oh. Okay.
Yeah.
I actually wasn't aware of that. I assumed it was in the tech
Well,
index.
it's a good assumption to make. But when I'm going to bring up communication services, the number one holding in the communication services sector is Facebook, followed by Google, the other class.
What's the number one holding in the tech index?
Well, I'm going to guess it's Apple, but let's bring it up and
if Apple's a tech company, then yeah, it's Apple.
Let's take a look here at the holdings of the tech sector. Number one is Apple, followed by Microsoft, Nvidia, Visa, and MasterCard.
Okay, so when are they going to move Visa and MasterCard to XLF to financials?
That's a good question. That's up to the people that are on the index committee at S&P or MSCI, right? They make those decisions. But the point is that the business of the world, and especially the United States, the business of the United States is technology. So you almost can't say tech's a sector. It's just too big. It's too much everything. And that's why they're pulling it out and putting stuff in other.
Yeah. Well, I mean, we're talking about energy being sub 3% of the S&P 500, but even energy companies invest heavily in technology. I mean, that is the future of energy companies, is being more efficient and coming up with cleaner way. It's technology. So technology is embedded in, like you're saying, basically everything. Yeah,
that's exactly right. Energy is now down to 2.8%. I'm looking at a live monitor. 2.8% of the S&P. The only thing lower is utilities at 2.6%.
It must have been a recent flip-flop.
It's been going on for years. As the price of energy's declined, profitability's gone down. There's a political and social movement away from traditional energy in this country, right? Move towards solar.
Yeah, well, you don't. Yeah. We used to. I have some horror stories with the energy sector based on some business we used to do. So we're quite aware. Yeah, MLP. We're quite aware of how energy has been politicized. You can't build a pipeline in America, but we'll AOK one in Russia, right? But yeah,
that's right.
So we know what that's all about, for sure. So it's interesting. I kind of had, I mean, not for any personal benefit, but I was kind of rooting for energy to maybe have more of a run. But we'll see. But it would make sense that we go back to growth being leader, I guess, because over growth is growth, and over time growth gets valued as such. Man.
Yeah. One of the things too is, we were talking about the inflation, and that comes, a lot of the reason that energy ran big this year was the run up in energy prices, right? We've got crude today at $71, but in a normal uh, 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 futures contract curve, the out months cost a little more. Right now, they're all rolling over, and the out months cost a little less. July crude is $71. December crude is $67. So the futures markets are suggesting that we are going to see the transitory thing that the Fed's talking about in commodities. But what about wages, right? We're raising wages, we're raising minimum wages, we're trying to do anything to get people back to work. That's not something that can just roll over and go away. Once you hire somebody at a rate, you don't cut pay. So that may end up causing some inflation that eats into profit margins in the short term, and that could give the market a little pause in the second half of this year, possibly.
Yeah, that's interesting. That is interesting. I wanted to ask you about wages just because I actually don't have it in my working knowledge right now what the recent wage data is, but I assume it's still certainly not outpacing inflation, obviously. So, I mean, I was going to ask, even with this inflation, even if it's tempers down here, I still could imagine at some point consumers get hit, especially when sort of some of the money, the government sending us checks, as that sort of gets fully filtered through the system. So if wages don't really keep up, then that could definitely hurt consumers, right?
Well, yeah, I mean, the thing it's interesting is, we have this political divide in this country, and they say, yeah, there's been great wealth creation. We manifested in our stock markets, manifested in our real estate prices. And people used to argue that it's not sort of even, that we didn't see the real wage, the purchasing power of a wage earner didn't go up. In other words, the country got wealthier, but a guy working as a bus driver, he got poorer because his wage bought less and less stuff. That changed dramatically in 2017. So 17, 18, 19, and the first part of 20, real wages. So what a person working could afford, they could afford more stuff, more healthcare, more gas, more transportation, more education, more food. And it was growing at a pace that was really pretty phenomenal. Unfortunately, the COVID pandemic showed up, and we have 9 million less people working today than we did then. So what the Fed's doing right now, the Fed's saying, I'm going to let inflation be damned. I want those 9 million people back working. The problem is, in some cases, the Treasury is incentivizing people not to work by giving, I think, well-intentioned, giving the supplemental unemployment benefit on top of the regular state unemployment insurance benefit. So that's a problem.
That is a problem, and there's still a lot of people out of work, and maybe it'll be harder for wages to get back onto a nice track until it gets a little tighter, and that may take a while, especially with the continued unemployment benefits going till September.
They go to September, and now some states, our governor here in California was at risk of losing his job. He was going to be recalled. He just decided to send every person in the state $600 last week. There's this incentive. So what's happening is companies are like, we need workers now. We have over 9 million job openings in the United States, the highest number of job openings ever. But what we can't get people to say, well, they're looking at their wage as the delta between what they get for staying home and the only a little bit more they might get to work. So, well, gee, if I can get whatever per week and not work, then I don't have to transport myself. I don't have to pay for childcare. I don't have to buy lunch at the office. I don't have to go get suits to wear, whatever. I'll just wait until the extended benefits. So the companies being desperate to get employees are offering more and more money.
Mhm.
And that in itself can end up being inflationary. And that's not one that can reverse itself out like lumber or coffee.
Yeah, that's a good point. And this is some unintended consequences of government tinkering with sort of the natural process of capitalism in a sense. I mean, because it's not changing the laws of economics where just consumers are going to make what's the most rational decision for them. And I don't really blame anyone. I mean, that's an easy life. If you're getting just marginally less and you have less expenses, yeah, why wouldn't you sit home?
Yeah,
So
and a lot of young people, let's say right out of college, maybe they didn't like that first job. I'll just I'll take the next 3 or 4 months off. I'm going to go travel. We've run into people that are doing that. We know they're doing that, and the reality is you're supposed to be looking in order to get the benefits, but that's not really a easily verifiable thing or enforced thing. So. It is what it is. And then on top of all that, we're really experimenting with a new monetary concept that's not been ever used before in this country. And that is this idea of just giving people checks. It's modern monetary theory is what it's called. In the past, when we had a recession, we would appropriate money and we would put people to work. In the Depression, we had work corps, right? And they did stuff. You build buildings, or even John Maynard Keynes, the great British economist who advocated this, would say, pay them to dig a hole, pay them to fill the hole back up again. But nobody's ever said, just give them money. And it's the first time we've ever tried that. And there are people in the political economic realm that suggest we should just do it every month forever. Just give everybody money.
yeah, there certainly is. And starting in about a month, some checks will be getting sent out for the rest of the year in terms of the child care tax credit advances. And when that runs out, I'm sure people will be clamoring for that to be continued. I'm sure it'll have a lot to do ultimately with who's in power, but it seems like there's a new relationship, a new burgeoning relationship between the government and the citizens, and it's an experiment. It's like science. Like what's going to be the ultimate conclusion?
Yeah, there's this, to understand it all, I think you got to go back to World War II, right? So we wanted to stay out of World War II. We didn't want to be part of it. We had these allies in Europe, and they were having a heck of a time. They were losing. I mean, the French were losing, the British were losing, and they kept coming to us, and we kept saying, no, no, no. But in the end, we said, okay, we'll sell you supplies, but we don't want pounds. We don't want francs. We want gold. So as World War II progressed, before we got into it, we ended up with pretty much all the gold in the world. The vast, vast majority of the gold was transferred from Europe to the United States. Then we ultimately entered the war, assisted and really caused the winning of the war and the defeat of the Nazis. But prior to the end, as we knew the end was near, we got all the bankers together, the central bankers together in New Hampshire at a place called Bretton Woods. And we came up with this agreement that the world's reserve currency would be the dollar, that international commerce would take place in dollars, that other countries' currencies would be convertible into dollars, and that dollars would be backed by gold. And everybody said, well, that makes sense because you guys have all the gold now. That happened. It worked out fine until Vietnam and the inflation, and we took ourselves off the gold standard. But we stayed the world's reserve currency. The Chinese would prefer it was them. The Russians would prefer it was them. The Europeans would prefer it was them. Nobody wants us to be the reserve currency. But being the reserve currency means that it has value everywhere, and most other currencies are not. They're kind of garbage. That's why Chinese people in China want to get their money out. So we then run these perpetual deficits. The question becomes, and they'll buy our treasuries, right? That's how they find the trade deficit finances the budget deficit to a certain degree. If they'll buy the treasuries, then people say, well, why don't we just spend more, keep spending? But at some point, there is a fulcrum and a tipping point at which you have created so much of this, taken on so much debt, that you will reach the tipping point and something else will rise up and you will cease to be the lone economic superpower of the world. I don't know where that is, but I don't really want to find out either, right? I think
Yeah, that sounds downright scary.
Well, debt to GDP in this country is over 100%. There is no longer a political party that advocates for balanced budget. That's not a thing anymore.
Right.
You have the two major political parties both agree that you can deficit spend forever. And I think you can have a small deficit given your position as the world's reserve currency. But you have to leave yourself a buffer for emergencies, right? You can expand that deficit in a recession. You can expand that deficit in a war. But I think we're so far into the deficit spending now that if we run into a recession, a demand-based recession, not like the one we had last year where we cut off supply, or we run into a major war, I think we're going to see where our weakness lies.
Yeah, that's a really good point. Yeah, really good point. And how that plays out and what the consequences are and what options are on the table to sort of ease the potential pain. Those are really big question marks that you definitely don't hear about because we're too busy bitching and moaning about things that don't really matter. And it seems like we're not really focused on what's really important for the long-term health of everyone in this country.
Yeah, I mean, I'm 54 years old. I plan to retire in the next, 5 to 10 years. If they keep printing all this money and it starts to come back to bite us, we could have high interest rates. That'd be good for me as a retiree, I guess. I could buy bonds, but I feel the younger generations, if we stop being the world's reserve currency, there's a lot of threats to that, right? If the rise of China is a threat to that, the rise of the cryptocurrencies. I mean, we could talk all day. I could talk all day to you about the threat to national security from crypto.
And why don't we talk about that for a minute?
Sure. So look, in this country, we had no restriction on competitive currency issuance, right? Banks back in the 1800s, they issued bank notes, and that was currency. And you would try to figure out as a consumer which bank was safe, and you would put your money there. And if that bank went away, you lost everything. And it happened to my great grandfather, who was an immigrant from Italy. It was a bank in Ridgefield, Connecticut, and he lost all his money. And so then we got FDIC insurance, we got a Federal Reserve. We almost never have a bank failure here in this country anymore. And if we do have a bank failure, we do have the FDIC insurance. But because America is the world's reserve currency and all global trade, it takes place in dollars, we have a lot of control. And that control is manifested in our foreign policy. When we're mad at North Korea, Cuba, or Iran for being bad actors, we can try to force them into better behavior using the economic system. If we're not the dominant world's reserve currency, we lose that ability, or that ability gets lessened. If Bitcoin becomes big enough and the Chinese can buy oil from Iran, how much ability do we have to then influence Iran from not being a bad country, not getting nuclear weapons, not funding terrorism, right? So the Federal Reserve is coming out later this month, June 2021, with a paper with some base recommendations. They don't get to set the rules. That's, the Congress and Treasury and everybody else. And then they're going to seek public input. And I think what's ultimately going to happen is you have to allow crypto. We're not going to be heavy-handed like China. Crypto is something people want, and you really can't tell Americans what to do. It's not part of our culture or makeup. So we're going to have
Thank God.
It's going to be, yes, thanks. And you're going to have it, you're going to be able to use it. But I think in the end, there's going to be some sort of control. They just came out and said you got to report transactions over $10,000 equivalent, fiat equivalent, which you do now with any banking transaction. But I think everybody agrees we still want to make sure we want our crypto. We love the concept, but we want to make sure we don't facilitate kidnapping, terrorism, scamming little old ladies, or anything that wants to come out of Cuba, Iran, or North Korea. I think we all agree on that. And I think ultimately we'll get there. We'll probably make mistakes along the way, but that's the real issue with the Bitcoin crypto situation, I think, right now.
So you don't see it becoming a global currency that is the main currency used for transaction?
I think it has the potential to be that, honestly. Some countries may not allow it, right? They may not allow their citizens to do it. But then you have others like, who was it? This was it El Salvador? It's an official currency.
Yeah, I saw that.
So that means it's legal tender. It means as a vendor, you must accept it. If you have a grocery store, it's not a can, it's not a may, it's a must. But I think for a country like that with so much corruption and such a horrible monetary history, it's probably a wise move.
Yeah, it's probably, maybe it's more stable. It has a more stable outlook than their own currency. I think that's one of the problems, at least for me, just thinking about it very, very on the surface, is I don't want my dollars in my pocket to be going up and down 20-30% per day in some cases.
Right.
Of course, there's thousands, or I don't know, maybe there's thousands of cryptocurrencies now. There seems to be a new one every day. There'd have to be some level of stability in the price, you would think, for people to really want to use that. To me, it just seems right now it's still it's just more speculative.
It is, but they've built in these things where they mine less and less each year, and they run out at a certain time. That's on the Bitcoin, and then you have the other things like the Ethereum, which has a function, right? It has a function on the transactions, the blockchain. So if it has a function, it has a value. What that value will be long term is boy, I'm not smart enough to know.
Me either.
The other way to not be in currency, right? To not have your wealth tied up in dollars is to just own assets, right? You can own shares of Apple Computer or Microsoft.
Mm-hmm.
You can own real estate. You can own gold. And crypto is just another thing. But I also hear a lot of people my age and up, because we don't want to learn new stuff, right?
Mm-hmm.
Just like my grandmother didn't want to learn to drive a car when my grandfather died. I don't want to learn to drive a car, right? And then she didn't want to learn how to write a check. And so a lot of folks don't want to learn new things, but the reality is crypto is not simply just an entry on a ledger. The blockchain technology is very real. It's very significant. It has compelling value in disintermediation and improving the trust quality in transactions. And I think when people figure that out and read and learn and listen, you start to get more and more interested in what it could do. How you make money on it's an entirely different question, but it's real.
Right. Yeah. I haven't found the energy or time to really dig into. I hear a lot of smart people say that there's real value. So I kind of just like, yeah, there's probably some value there. I figure there's some difference between the utility of blockchain versus like actually owning it as a currency. And then of course there's always that thought, like when people ask me, like when someone who's never asked me about investment advice ever is asking me about should I buy Bitcoin. I mean, to me, there's just like it's a little euphoric when everyone wants it, and then everyone's not going to want it when it's going down. People just want things that are going up because they're going up, and then everybody's talking about it.
That's right. That's like the GameStops and all of that. I have a pat answer I give on the Bitcoin question when people ask me for advice on it. I say, well, it's not a security. Therefore, I can't give advice on it because I'm.
There you go.
There you go. And then they kind of, oh, okay. And then you can have a conversation or whatever.
Yeah. Because I have no method of valuing it.
There is no method of that.
There's no method. I mean, the only thing that has like Bitcoin to me that I come back to is that, yeah, there is the scarcity factor. Okay, so there's scarcity, but why do people want it in the first place? So
I think the people that want it are concerned about the value of fiat currency because of the amount that we're producing, the amount the money supply has gone up, and they're looking at it. Some people are looking at it as a hedge against that. And if you're in a country like Venezuela, it's a pretty good alternative to your fiat currency. If you're in Russia or China, where you don't trust your own banking system, where you are worried things will just your bank account will just evaporate and disappear, you see Bitcoin as a safer alternative. Here in America, we don't necessarily think that way because we don't believe our government's going to steal money out of our bank account. They're going to tax us, they're going to regulate us, but we're not worried about our banks going under because of SIPC, because of these great systems we have in place. I had an intern 2 summers ago who's from Harvard, but he was also from Russia. And he is the one that enlightened me to the fact that people all over the world would much rather have Bitcoin and all of its risks and all of its issues than their native currency, Zimbabwe, et cetera. And that's when I sort of started to get it a little bit.
Yeah. So that's going back to what you're saying. It can improve the trust of transaction.
Yes.
Yeah. So not necessarily as much in America, but globally. Yeah. Okay. I can see that. Yeah. Yep. I'm in my own little bubble here in America. So it took me a second there to understand that.
Yeah.
Yeah. So that's Bitcoin. That was intriguing.
Cool.
Yeah. It was. I mean, I like learning about it. I just don't, I don't have the energy or time to become an expert in Bitcoin because I don't think it's going to get me very far professionally or personally, and I don't have the stomach to necessarily just buy a boatload of it and just hold it because I'm not crazy. So
yeah, well, I always tell everybody when people pitch me investments, I say, well, look, I own some Apple computer, some Microsoft, some Google. It's got to be better than those. And, Apple computers returning like $95 billion a year to shareholders through dividends and buybacks. How do you beat that?
Well, yeah. See, I like Apple too. I sort of consider Apple like kind of an old world kind of company in the sense that I honestly, I don't know where, maybe I just haven't felt it because I'm an Android user, but I haven't really felt where they've had any major innovation since the iPhone or iPad, I guess.
Yeah, I don't know, but in 2020 they did 275 billion in revenue, and this year they're going to do 360 billion. So
yeah, we can't argue with that.
it's the services side, the app stores and all that. It's growing at like
perhaps
8% CAGR. Yeah.
Perhaps their ecosystem is just so large and powerful that they don't need any crazy innovation. They just need to execute on their opportunities.
Yeah, I think too, though. And I think we've been so focused on coronaviruses and Bitcoins and everything last year that the biggest economic story of all has been not talked about as much as it should be. And that's 5G and the 5G rollout. And Apple's a pretty big player in that as well.
Yeah, I haven't heard much about 5G at all really recently. It's just all the meme and mania and the GameStops and the AMCs and the crazy stuff that is not really, I shouldn't really be talking about because I certainly would never recommend that. But yes. 5G is interesting. I did notice that you have sort of these stock models, I would say, but then you have 5G. I didn't mean to say stock in any sort of bad way. I just mean
no, I know what you meant. Yeah, absolutely.
Yeah. Then you have 5G. So you have like a one-off sort of thematic sort of play here, which is interesting. I'm just wondering why. And I saw you started it in 2020.
Yep.
So is this potentially the first of a few you're going to go into, or why 5G? Is that where you have most conviction?
Yeah, I just have a really, really high level of conviction there. we're talking about speeds 2, 3, 4, 500 times of your current phone. And you think, well, gosh, I get my little videos, I get my text messages, my emails come through. I can watch, a TV show. I can put it in front of my kid, or, to distract them for a while. But 5G has really, really broad implications for things like telemedicine, battlefield medicine. Doctors through robotics can do real time, because what it does is it drops that latency, and a latency in watching a video on YouTube is not a big deal. But when it comes down to life and death decisions, it's going to be big. Automated things in factories and cities. It's all very deflationary, by the way, right? Driving down cost of doing things.
Mm-hmm.
And then you look at 5G and you've got the people that make the chips. That's the Qualcomms, Skyworks, Qorvos of the world. You've got the people that make the handsets. That's your Apple, right? And Apple's starting to make some of their own chips. You got the people that make the towers, because all the towers have to be closer together and denser. So there's this massive engineering and construction. You talk about fiscal stimulus. It's 5G. And then lastly, you got all the engineering companies that are, they're actually just going out there and installing stuff and running antennas and cables. And it's about a 15-year cycle, and it only started in 2020. You've heard about the chip shortages, for cars. The big winners, are going to be these chip companies, handset makers. And then lastly, of course, you got the carriers, right? Verizon, AT&T, T-Mobile. But they're the ones that have to pay the big bucks to buy the spectrum from the FCC. And they tend to end up issuing an awful lot of debt. And then they just compete with each other so hard to get the customers that they end up dropping and lowering the prices to the consumer. So from a long-term perspective, the carriers, Verizon, AT&T, okay, maybe. T-Mobile's been good, but I'd rather have the chip makers and the handset makers and the towers. Those would be the ones I want.
Yeah, the towers are interesting. I used to like American Tower. I still do like it. I just used to actually like it a lot. As a yield play. What happened? Didn't something happen to them? This is going into the weeds on one company, but didn't something happen to them with? Oh, maybe it was the Sprint. Yeah, it was the Sprint Verizon. So maybe they lost the rental space or whatever from the merger.
Yeah, I remember something about that. I don't remember the details. It's been a while.
Okay. There's one 5G company that I know. It's hardly known at all, but they have a crap ton of patents. It's InterDigital. Do you know them?
I don't know that one.
Okay, well,
IDCC, right?
IDCC, yeah. My old man invested in that company very, very, very long ago. It was local at the time. It is local to where we are. So that's one that's interesting. They just got a new CEO from Qualcomm, I believe. He was from Qualcomm, and stock finally broke out a little bit. We don't really know why. Yeah,
it's broken out quite a bit. It's still a small company. It looks like it's a 2.4 billion market cap, which makes it pretty small, and about 400 million in debt. So less than 3 billion total capitalization, and stock's been on a little bit of a roll. It looks like. I'll have to look further into it.
Yeah, they're basically just patents, and they're just basically patent trolls. So they just try and sue all the people that are infringing on their patents overseas and get settlements and all that kind of thing. But they do have a lot of patents. If you look at the global 5G patents, they're up there as relative percentage of them. They got a lot. Let's see. So we're pretty much out of time, but maybe just quickly, what are your views? We do get some questions on taxes, and if you have any sense of what's going to happen, or what are your views for what the Biden administration might be able to get done there?
Yeah, I like the way you asked the question, like what they might be able to get done. And I think what we're learning is they're not going to get very much done. There's a move to get the corporate tax rate from 20 to 28%, right? From 21, 25 up to 28%. I think that's likely to happen. But there's also raising the marginal income tax bracket for individuals. I don't think that's going to happen. The capital gains, getting rid of long-term and making it short-term, don't think it's going to happen.
Yeah.
Removing the step-up basis on the death of a spouse,
that would be,
and the capital gains would be absolutely horrific for job creation and for small businesses in this country. So I don't think that's going to happen because, you always get worried when one party has both houses in the presidency. It doesn't matter which party it is, because they can sort of go to their base horrible desires. And
yeah,
both parties have those horrible desires on their fringes. And it's a very, very small lead in the House. And obviously it's 50-50 in the Senate. There's just not enough Democrats in the Senate that will, at this point, let any of this happen and go through. They would have wanted to try to get it done very early on in the administration to get it behind them before the midterm elections. So I don't think there's anything major coming other than perhaps a small corporate rate hike to 28%.
Yeah, I would completely agree with that. It's just too tight, and the Democrats, there is a couple senators that, I'm not so sure really are Democrats. So it's pretty tight, and I would agree. So I don't think people need to get too worried. I mean, it's just illogical for some of that stuff to get done. It's just too against sort of the real reality of what that would do. Especially like the step up. Yeah, that would just be terrible. I mean, I can't even imagine having to leave behind huge tax bills to heirs of companies and individuals. Yeah, crazy.
Yeah, I mean, there is. I mean, the argument, of course, is okay. So I've been married for 30 years. We've been in our home for 20 years, and we have stocks that we've owned for 25 years. And if I predecease my wife, we have Microsoft at a basis of like, I don't know, $3 or something, right? Because all the splits. So she would then get a basis up to what it is today. And that originally went into law because people had family farms. And, let's say the husband died, typically the husband died first, and the mom or the wife, or maybe even the kids, they had to sell the farm to pay the tax. And so that's why we got that step up basis. It would be absolutely an economic disaster were we to lose that. It would really stifle capital formation and job creation. When you're 9 million jobs down from where you were in January, February of 2020, to do that now would be not a smart move.
Yeah, I would 100% agree. All right, well, we're about at an hour, so I think we'll leave it at that. I really appreciate you coming on the show. That was a great conversation.
Thank you, David. It's been my pleasure to be here. And if I could put in a little shameless plug, I do a weekly podcast. It's just me. I don't have guests, but it's called Slaying Bulls and Bears with Herb Morgan. So
yeah, that's a great name. And when I release this show, I will most certainly put that in the show notes for everyone to find.
Awesome.
And yeah, so I really appreciate it. And let's do this again in the future.
Anytime. Appreciate being on.
All right. Take care.
Take care.
Email us at investsmarterpod@gmail.com with questions to be highlighted on the show. Thanks for listening, and keep investing smarter.